Let's get to the three things you need to know today. First up, U.S. stock futures wavering with major averages trading within points of their record highs. Investors will be closely watching everything from central banks to geopolitics this week. President Trump is set to meet with Ukrainian President Volodymyr Zelensky this afternoon following his summit with Vladimir Putin on Friday. A resolution in the Ukraine war could be a positive market catalyst if it reduces geopolitical uncertainty and buffers global energy supplies. Plus, the other big focus for traders, the Federal Reserve Symposium in Jackson Hole, Wyoming. The annual retreat kicks off later this week. Investors will be monitoring Chair Jerome Powell's speech on Friday for any clues on a September interest rate cut. The Fed currently balancing higher consumer prices with the slowing labor market. And it's a big week for retail earnings as well. Major retailers like Walmart, Target, Home Depot, Lowe's, they're all out with results. Investors will be watching for the impact of tariffs on these companies and any signs on the health of the U.S. consumer. Let's get a check-in on stock futures here. We did have a little bit of weakness on Friday in the S&P and the Nasdaq, but they're still trading near their record highs. This morning, both of them pointing to a slightly lower open, the Dow a slightly higher open, but really we can call it little changed across the board going into the week. Let's dig into our top stories of the day. Stocks coming off a second straight winning week as the S&P 500 and Nasdaq continue to notch record highs. Plus, Fed officials in Wyoming for the annual Jackson Hole Economic Symposium, and retail earnings due out with results expected from Walmart, Target, Home Depot, and Lowe's. Joining me now, senior reporter Brooke DePalma live at the Nasdaq, Fed correspondent Jennifer Schonberger, and our senior markets reporter Josh Schaefer. Jen, I'm going to start with you on the Fed here because we've been watching the situation so very closely. What should we be looking for from Jay Powell this week?
We sure have, Julie, and this will be Fed Chair Jay Powell's last speech as Fed Chair in Jackson Hole. And any year, a speech that the Fed Chair makes at Jackson Hole is a major event. And this year takes on greater importance because it will be his last speech and therefore his legacy that he is leaving. And we know that Chair Powell said he wants to pass on a strong economy to whoever his successor will be. And this comes at a time when it seems like we're starting to see a bit of a weaker labor market. At the same time, inflation, it doesn't look like it's moving in the right direction. So the Fed really has a dilemma on its hands. And at the same time, the White House is very much pressuring the Fed to slash rates. And the markets are trying to force Fed Chair Jay Powell's hand to cut rates in September. So it'll be interesting to see whether he still believes a moderately restrictive policy stance makes sense here, or given what we saw with the weaker jobs reading in July, whether he cracks the door open and lays the groundwork for that. I will note that Powell said during his press conference after the policy meeting in July, before we got the July jobs report, that he did see downside risks to the job market at that point. So the question is, did that July jobs report sway him enough, or is the inflation data that we got in July enough to still wait and see?
And of course, there are, as we keep reminding folks, the central bank, the FOMC, the committee that sets policy, is not one person, right? It's a whole committee. And there were some interesting comments that came out from Raphael Bostic after he sort of did a tour where he tried to talk to a group of constituents.
Yeah, I was actually surprised by that because this was last week. Bostic was in Alabama. And ahead of doing that tour, he actually spoke, and that was live streamed to the media, in which he said, the question for the Fed is really to determine whether the labor market has weakened enough where we don't have the time to be patient and wait and see on the inflation side. And then it looks like he went and did the tour, and then he kind of changed his mind to, well, maybe we move in September and then we wait and see. So that was an interesting change of heart there, and it'll be interesting to see whether we see the rest of the committee flip as we get further data closer to September. Remember, we do get another jobs report before the Fed meets on September 17th.
Yes, we do. We have a PCE report coming our way as well. Brooke, what about what the street is expecting and looking for from Jackson Hole?
Yeah, well, first taking a step back, starting this week, stock futures are little change, making your way into what is expected to be a major speech set to happen this week. And Ed Yardeni really said it best here. He said the markets are waiting with a bated breath for expectations of Powell's speech on Friday. And largely what we're seeing is that investors are pricing in a likelihood that the Federal Reserve will cut interest rates in September, really looking for any key through lines, key tea leaves from the speech on Friday that would indicate that this will happen. But if you take a look at the Fed Watch tool, we're seeing that a more than or nearly 83% chance that investors are pricing in right now that that cut will happen in September. We also know that between now and April 2026, investors are also pricing in 4 quarter-point cuts. And largely what we're hearing from key players on the street, including Evercore's ISI Krishna Guha, is that investors, or the message, will be consistent with a pretty solid central case that the September rate cut will happen. And as I said before, really bated breath that investors have right here with stock futures not really changed right now.
And yes, of course, the Fed is important. You know, we talk about it a lot. But the reason that stocks keep making record highs, maybe it has something to do with the Fed. But Josh, it probably has a lot more to do with earnings. And I'm just struck by yet another note hitting my inbox this morning. This one from Ryan Grabinski over at Strategas. And the title of it is Q2 earnings exceed pre-Liberation Day expectations. And you probably could go to your inbox and find a dozen or 24 similar notes.
It's the story of the market right now, Julie, when we think about trying to just explain why the stock market is at record highs, right? Because we just spent 5 minutes talking about a lot of risks that are out there for both the economy and markets, and then you just look at a market that continues to go up and you're sort of asking yourself why. Well, if you read through something like David Kostin at Goldman Sachs' note on second quarter earnings, he's calling it one of the greatest. The quarter has been marked by one of the greatest frequency of earnings beats on record. They're looking at a 25-year period there. They're seeing 60% of companies beating S&P consensus forecast by more than one standard deviation. So yes, earnings always come in and earnings always beat, right? You sort of lower that bar. They usually come in better than Wall Street expected. They came in significantly better than Wall Street expected. And sort of the kicker, as we've been thinking about this moving forward, is the amount of companies that have been raising their full year guidance too. So Goldman pointing out in this note, 56% of companies raised their full year 2025 guidance. That was more than double the amount that did that in the first quarter. So what you're seeing as we come into the second quarter, companies have been able to start to understand what the tariff structure is going to look like. They're feeling more confident about their business going into the end of this year and into next year. And that's the key part, again, of sort of the market rally story. When we think about all these macro cross currents, what's it mean for profits? And right now, companies are telling you it's all okay for their corporate profit outlook.
There might be one group that's an exception, or at least pockets of it, and that's retail. And that's a group that Brooke knows very well. Now, companies like Walmart have been holding up pretty well, right? But we'll kind of see how things shake out this earnings season for the retailers with these cross currents that we've been talking about.
Julie, that's right. These retailers really rounding out what has been a really, really robust Q2 earnings calendar quarter. And what we're expected to hear is insight on 3 key sectors here, really. Home improvement, so we'll hear from Lowe's and Home Depot. Big box, we'll hear from Walmart and Target. And then we'll also hear from off-price retailers, Ross and TJ Maxx. So it's really key insight into each of these 3 areas. Now, home improvement retailers, both Home Depot and Lowe's, are expected to see same-store sales growth of a little more than 1%, which would be a turn to positive for the first time in about 2 quarters, but more of a robust print is expected as likely consumers just sort of put past those higher interest rates and now returned a bit to DIY. Walmart and Target, those continue to be the tale of 2 retailers. It's highly likely that Walmart won over yet again this quarter with their convenience and that best price model, where Target, largely a discretionary retailer, likely was hit by consumers pulling back and tariffs. And then in the last round here, you have those off-price retailers. And what we've seen so much is these off-price retailers outperform in this environment where consumers are seeking out the best prices. And so we'll really get a key insight into how exactly the consumer is holding up in this environment.
All of that said, and we've just been having this conversation about earnings and how that supported the market. Companies like Walmart, sure, are important for the overall macro direction. But really, we all know there's one group that's been driving things. And Josh, it continues to be tech. So yes, even though investors in sort of individual retailers will get buffeted perhaps by the retail earnings, and even though we'll get a bigger picture on the macro about how the consumer's doing, it's probably going to still be tech driving the bus.
Yeah, when you look at what's been driving just the market, right, over the last month, Julie, it has been mega cap tech. We can use the Magnificent Seven if we still want to use sort of that moniker in that group, because it's easy to look at them on a numbers basis, right? And you take a look at how they performed over the last 2 months. Mag 7's up 13%. S&P 500's only up about half of that at 7.5%. And then the equal weight, which doesn't get cap weighted, right? So the big companies don't carry it higher. That's only up 5%. So it's been a large cap tech rally still, which is why I think when you think about the final 2 weeks of August here, yes, Jackson Hole going to be big on Friday and markets will be waiting for that. You have to keep your focus also on NVIDIA earnings coming out next week, right? Stuart Kaiser over at Citi pointing out that he thinks that might be the biggest macro risk right now when you think about the next 2 weeks and just the options pricing you're looking at in the market. NVIDIA expected to kind of be that key mover. So we'll get through some macro this week, and then we'll come back to those tech earnings come next week.
Yeah, and Torsten Slok of Apollo pointing out that NVIDIA's price to earnings ratio is creeping up there. So that's something to consider as well as we head towards those numbers. Brooke, Jennifer, Josh, thanks a lot, guys. Zooming in now, let's take a look at shares of Novo Nordisk, the company's blockbuster medication Wegovy receiving approval to treat liver disease in the U.S. The shares up almost 5%. Here with the details, senior health reporter Anjali Kamlani. Anja, it's so interesting because when these drugs first came out, the word panacea was being thrown around a little bit. So it's interesting to see now some of these expanded indications.
That's right. And we're seeing that come to fruition. We know that investors have been looking at it. And we've also seen that the prospect of these indications from the GLP-1s have actually been boosting the market. So when you talk about liver disease, expectations of a multi-million-dollar market become multi-billion by 2032, about 20 billion, in fact, by 2032, just on the prospect of this. So what we got was really good data out of Novo and the approval there showing that the Wegovy, the weight loss drug, helped reduce fat in the liver by about 68%. And then you've got the decrease of disease by about 37%. So looking at those numbers, that's sort of why the FDA went ahead with this approval. And this adds to the race as well between the two market leaders. We know Eli Lilly has also been looking for expanded indications for its Zepbound, that's its weight loss drug. As you can see, now Wegovy has liver disease as well as heart disease risk. We know that there were some cardiovascular benefits. And then Zepbound has been used for obstructive sleep apnea. And so that's the indication as well. But both companies continue to pursue additional indications. The clinical trials are ongoing as well. So we're likely to see more of these types of results and approvals in the near future.
And later on, you're going to be speaking to the GoodRx CEO, right?
That's right, and that's because more Novo news. GoodRx has teamed up with Novo Nordisk to provide $4.99 per month access to both Ozempic and Wegovy, and that's the first time that any company has had a cash price for Ozempic. So stay tuned, we'll get more details later.
We will, and I think those Novo shares are even extending those gains as we just got that news dropping a few minutes ago. Looking forward to that interview, Anjali.
Same.
As she mentioned, she's going to be talking to Wendy Barnes from GoodRx. Coming up next, we're going to continue our focus on the markets heading to the opening bell. Soho House is inking a deal to go private. We'll bring you the details, get a check in on the health of corporate earnings after the break. Now time for some of today's trending tickers. We are watching Air Canada, Soho House, and Dayforce. First up, Air Canada suspending its full-year guidance as a flight attendant strike enters its third day. Roughly 10,000 workers walked off the job Saturday after contract negotiations reached an impasse. Compensation remains a big sticking point in the talks. The Canadian government ordered workers back on the job Sunday, but the union says it will defy that order. The fallout from the suspended operations expected to be felt across the globe. Air Canada operates nearly 200 daily flights to the U.S., and its cargo unit operates across 50 countries. Next up, Soho House going private in a deal worth roughly $2.7 billion, including debt. MCR Hotels is leading the group of investors taking the private members club private. Actor Ashton Kutcher, he's also involved in the deal. He leads a group of investors bringing new capital, and he'll also sit on Soho House's board once the deal's completed. Shareholders will get $9 a share. That's about a 17% premium to the stock's closing price on Friday. Soho House has been public since 2021, but it's struggled significantly since its debut. The company has faced activist pressure from Third Point's Dan Loeb about a sale. He had called for more transparency in the process and pushed the board to consider outside bidders back in January. Apollo Global Management, which is the parent company of Yahoo Finance, is financing that deal. And finally, sticking with deals to go private, Thoma Bravo reportedly looking to acquire HR management software company Dayforce. That's according to a report from Bloomberg. The buyout would take Dayforce private and might be announced in the coming weeks. Sources caution that while discussions are advanced, there is a chance they could fall through or another bidder may emerge, per Bloomberg. Dayforce shares are down more than 60% from their all-time high. After a pandemic-era surge, HR and payroll management companies like Dayforce have struggled to maintain momentum. Post-COVID, the shares surging 25% this morning. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Second quarter earnings season coming to a close. So far, it's been a strong bat of results. Of the 92% of S&P 500 companies out with earnings, 60% have beaten the EPS forecasts. Can the momentum last? Joining us now, Dana D'Auria, Envestnet Solutions co-CIO Group President. Dana, good morning. It's good to see you. We've been talking about all of the elements this morning that investors are considering, whether it's the Fed, whether it's economic growth. But does it come down to earnings and how strong they have been?
Well, I think that's a huge part of it, right? I mean, in spite of all the concern about tariffs driving more inflation and certainly in producer price index, we're seeing that starting to happen. It remains to be seen what gets passed on to consumers. But at the end of the day, it's been several months now since quote unquote Liberation Day, and earnings have not flagged. In fact, just as you pointed out, we're up, and we're not just up in tech, right? We're up across most of the sectors. So certainly tech driving a lot of this, certainly the AI trade, CapEx, and these big technology companies driving a huge thrust in terms of what our economy is doing right now. But at the end of the day, it's all the sectors that are kind of beating. And in and of itself, that's not unusual, but you're remembering that it's on the heels of the concern that we had with tariffs and also the fact that the Fed had paused the interest rate cutting. It says something about the economy's robustness.
And so as we go into the remaining couple of weeks here, and NVIDIA in particular, the fact that it is now, the valuation has crept up of that stock. For a while there, a lot of investors were saying it's still a bargain, it's still a bargain. Yeah. Is that still how people should be thinking about, maybe not NVIDIA specifically, but the sector more broadly?
Yeah, I don't think anybody really knows, right, how much the AI trade is going to benefit these companies and how long it's going to take. I think everybody knows AI is transformative, or we've coalesced around that. How long it takes to have the productivity implications that we want it to have, remains to be seen. I think what I would say for most investors is that you've got a ton of NVIDIA in your portfolio, no matter what you've done, right? Unless you're massively different from the market index, which most people aren't, even in active management. If you look across a platform like ours, just trillions of assets flowing across it, that standard 60-40, not huge tracking error to the markets is pretty common still, right? And so when you think about that, you think most people have a ton of NVIDIA already. They don't have to make a decision, hey, do I want to put more into the AI trade? They've got a huge slug of the AI trade driving their performance. We sort of recommend make sure you're staying diversified across other sectors.
And Dana, you're mentioning your platform reminds me, I want to get your take on what you're seeing and what you're hearing from clients, right? You have a pretty good pulse of what's going on out in the asset management, wealth manager community out there. What are those folks worried about right now?
Yeah, there's certainly a lot of questions around when does the bill come due, so to speak, right? At what point do, the tariffs actually start to bite? Is there going to be stagflation? and if that's the case, how should you invest, kind of accordingly. But you're not hearing people sort of fleeing, right? It's very clear that sort of pulling back and working against the bull case really hasn't paid off. And, sort of the idea, if you think about the last couple of years, and think about in our world, you have retail advisors working with these clients. They have their quarterly annual meetings. They talk to them about what's going on in the market and the benefit of kind of riding it out largely, right? I mean, a large preponderance are going to talk about just discipline, ignoring what's going on in the terms of the volatility and just staying attached to your goals and kind of riding it out long term. And if you look at what happened the last couple of years in the market, that paid off gangbusters, right? And so here we are again, markets up, international markets paying dramatically, so the diversification story working out. I think people are sort of, they're biding their time and they're kind of sticking with it. And the main thing that, you just want to kind of be concerned with is making sure that you stay at your risk tolerance, that you're not letting the equity ride so much that now too much of the portfolio sits in equity versus kind of the ballast in the fixed income. In other words, is it time to rebalance a little bit?
Right. And is it also time to rebalance? I wonder about the catalyst that's coming later this week in the form of Jay Powell and whether that could be something that could upset the apple cart a little bit.
I mean, this market, we just consistently overshoot on expectations of the Fed. And so, at this point, obviously, the base case in September is a cut. In fact, the discussion now is more around, will it be 50 potentially, as opposed to 25, because they have come to the conclusion that they're actually behind the curve. We had a double dissension at the last meeting to not cut. And so I think the market, as it always tends to do, is just kind of leaping way ahead. But don't forget, there are some implications. Inflation is creeping up in the producer index. That will eventually kind of go down to consumer, not one for one necessarily, right? But certainly to a certain extent. So I think we should, I believe a 25 basis point cut is probably coming. I believe Powell will talk about it and kind of try to assuage markets a little bit. But I don't think he's going to get pulled into, hey, we made a mistake, we're behind the curve, we need to really, cut rates faster now. I don't think you'll hear that.
We shall see in just a few days. Dana, good to see you. Thank you.
You too.
Coming up on Yahoo Finance, we've got Opening Bid. Executive editor Brian Sozzi joins us now. Brian, what's coming up?
Well, got a lot coming up, Julie. We're going to talk about stocks at records, but really locked and loaded on our Power Player segment today. Chipotle CEO Scott Boatwright comes in, and Julie, he serves up some great analysis.
Serves up? Was that on purpose?
Serves up, ears up,
I don't
hooks
know.
up, whatever you got, Julie. I got puns. I'm here all day.
I'm ready for him. Thanks so much, Soz. Looking forward to it. That does it for Morning Brief.